Welcome back to the podcast. Ernest, how you doing today?
I'm good.
Good. I am. How was your weekend? Did you do anything exciting?
So, I don't know if anyone cares about this, but my basketball team got kicked out of the finals. Not finals,
Yeah.
playoffs.
Oh, okay.
First round.
All right. That's not. And what position do you play?
I play shooting guard.
Okay, shooting guard. And do you like to go for threes, or you're?
Yeah, there's a funny story about this where when I first met my wife, she's like, "What do you do for fun?"
Yeah.
I said, "I play basketball."
Yeah.
She's like, "Oh, you must be the kind of guy who only stands there and shoots threes."
Yeah.
I said, "Why do you say that?" She's like, "Well, yeah, because you're skinny and not strong, and you're short."
You are short. I mean, you're taller than me, but you're short. Short for basketball. Yeah.
Yeah.
Yeah. So.
So we lost.
Yeah. Sorry to hear. I went and bought some new. It's good time to get deals on golf equipment. So they have something called demo sales, and you can get, if they use them in the golf store for people who want to try this club or that club, and they just use them in the store and their simulators, they're now half off. So I got two amazing clubs for half price. That's value investing, Ernest.
You get a Garmin watch?
Well, I was gonna get a watch. I'm hoping my wife will get it for me for my birthday. My birthday's coming up in February. That I want a new watch, and I want a Garmin watch, and I want to be fitted for a proper driver, because I can't get my drives past about 180, 190, and that's not good enough. Anyways, enough about golf and basketball. Those are, I'm sure you didn't tune in for that. We have an exciting show today. We're going to talk about one of our newest investments. It's a name we were watching for a long time, and it fits our strategy, the type of company that we like to partner with. But before we get started, it's November 11th, Monday, November 11th, and pretty much a week out after the U.S. presidential election. And maybe to the shock of some or the shock of none, Donald Trump has won the presidency. We're still waiting, Ernest, to find out if it's a clean sweep for the Republicans. I think the House, it looks like it's going to be favored for the Republicans, but still waiting, I guess, for a couple more races to finish. So we'll find out how things are going to progress. But the market didn't wait, Ernest. Last week, the week of November 4th, the week of the election, the stock market had one of its best weeks ever. U.S. stocks rocketed up. Toronto stocks kind of followed along a little bit later in the week. So, Ernest, your take on the Trump winning the election. Everybody probably knows what we're going to say already about making portfolio changes, but let's talk about some of the impacts and some of the things that we're seeing and paying attention to as a result of the change in the presidency. Go ahead.
One of the things that we try hard to do here is it's a big mistake generally to confuse your own personal views about politics or about society in general with being a successful investment philosophy, right? So one of the things that we try hard to do is to invest the way that the world is, rather than the way that you want it to be.
So if someone says, "I don't like Donald Trump, I don't want you to invest any money in the U.S. at all for me,"
Right.
That may be very detrimental to your portfolio results.
Exactly. So, like me personally, I don't think that social media, for instance, is a net positive contribution to humanity.
Yeah.
But that doesn't mean that the stocks aren't going to do well.
Yes.
Right? Because the reality is that everybody is addicted to things like Facebook.
Yes, of course. Yes,
So
of course.
that's generally kind of the attitude that I have towards a Donald Trump presidency, is that, like you said, we don't really know exactly how it'll play out, whether they're going to control the House, or even necessarily what kind of policy things that will happen under a Trump administration. But I think we don't want to overreact either way.
Yeah, I think you make a good point. For those clients and those following along with us, we set the ground rules for our clients in terms of how we want to invest, what the goals are, what we're trying to achieve. As a company, we do not invest in any tobacco manufacturing, we don't invest in online gamblers, and we don't invest in companies that actually make weapons, right? We may invest in some companies that are involved in defense, But those are the companies we're actively trying not to invest in. Aside from that, our goal is to grow our clients' portfolios and find and allocate their capital in the homes that treat them the best, right? And so, as long as we lay those ground rules for clients, clients can tell us if they don't want to own specific companies or industries. But this is really how we invest for our clients.
I think it is fair to say that we should probably expect that under Trump, there are going to be probably lower taxes on corporations and maybe individuals.
So let's back up for a second. The U.S. corporate tax rate is about 21%.
Yes.
The expectation is that corporate tax rates in 2025 and beyond will fall to around 15%.
Yes, that was what Trump had said during the campaign.
That's a quite meaningful drop in corporate tax rates, and that should benefit companies' bottom lines and their earnings per share immediately.
Yeah, I think it's not clear exactly how it'll play out because I think he had wanted to condition the tax cut with for those companies that are manufacturing in America, rather than a blanket cut. So we'll see how that plays out.
That's right, and keep in mind a lot of companies on the S&P 500 are domiciled in other countries. Some of them may even have lower tax rates than 15% today, so it may not apply across the board to all companies as well.
Another thing that is probably likely to happen is laxer enforcement on antitrust.
And why do you think that would be the case?
Well, I think that's most of this is just the fact that under Joe Biden, the FTC and the Department of Justice have been very strict regarding antitrust.
Yeah,
they've challenged a lot of deals, including some that are extremely minor.
Most of our largest holdings are, as we talked about on a previous podcast, subject to an antitrust lawsuit by the Department of Justice right now.
So, like, for example, they didn't let Amazon buy iRobot.
Which is ridiculous.
Yeah. They didn't let Spirit Airlines merge with JetBlue.
Yeah.
They didn't, there's, like you said, there's antitrust.
There was that handbag one, the Tapestry.
Capri and Tapestry.
Yeah.
Yeah. So, they really have taken a different approach to antitrust than, really legal precedent has been working.
Yeah.
And so I would expect most of this to pull back, which would benefit some of our companies in the portfolio, like Live Nation Entertainment, which has an active antitrust lawsuit against them.
Ernest, pretty much all the big techs, except for Microsoft, for some strange reason, are not allowed to make any acquisitions. I think Meta tried to make like a $300 million acquisition and it was blocked.
Yep.
Apple's has made some really under the radar. As long as they don't make big splashy acquisitions of publicly traded companies, they're kind of left alone. But yeah, it's pretty scary for those companies in the sense that they can't grow. Although we don't have to feel bad for them. They're generating so much money, they can figure other stuff out.
Although to big tech,
I
think Vice President Vance has publicly stated his dislike for big tech companies and how much power they have. So, it's hard to say exactly how it'll play out.
Yeah, okay. So the bottom line is, so then why the euphoria in the markets? Were the markets maybe pricing in the potential of a Harris victory and maybe more onerous restrictions on capital gains, for example, more onerous restrictions on taxes, maybe even a tightening of antitrust laws? Is that maybe some of that undoing?
Yeah, and I think for the antitrust aspect and the allowing more mergers and acquisitions, I think you really see that in the performance of the investment banks. Goldman Sachs was up 10% after the election. Where
still going up.
Same with banks like JP Morgan. They were up. They were doing extremely well after the election. Whereas some other names are maybe a little bit more mixed, like the semiconductor industry. Who knows?
Yeah, and we were, like you said, we don't know how all this is going to play out. Many are concerned, obviously, about the impact of tariffs. That is a tax on imports. Pretty much every single U.S. company imports some type of goods from China or Mexico or Canada or Indonesia, you name it. So that would wouldn't that be very painful for the U.S. consumer if tariffs were to go through?
Yeah, that's I guess the thing that is a little harder to figure out is that a lot of Trump's proposals are actually quite inflationary on the surface of it, which is, doesn't really make a lot of sense, given I think a lot of voters were hoping that he would lower inflation.
Yeah.
But I'm not here to comment on the
No.
practicality of his proposals.
No. Some of them seem counterintuitive to each other, but like you said, we'll see how things play out. In the meantime, the markets seem to be, I think what's being more focused on is the fact that the results from U.S. companies are very strong. The Q3 earnings, and I didn't see any company warning that Q4, oh my God, we're going to go into a depression or anything. Companies are still guiding for very strong results going forward. Interest rates, although on the short end, they're being cut. Another interest rate cut in the U.S. the other day. Canada looks like it's going to continue to cut. Potential of lower corporate taxes. There's some good vibes that are happening in the U.S. economy. We saw some strong data points, the ISM services number. These are all short-term points, not much to do with long-term investing, but, explaining what's happening in today's markets. We try to keep pretty zen about things, try not to get euphoric. I guess one could say that markets are now approaching the most expensive levels they have in quite a long time. Although, you have to look under the hoods. Are companies better than they are today? Where were interest rates when markets were at these levels before? I don't think we're Ernest, we're at a .com type insanity yet, but
we'll see.
Could happen. So we have to keep on our toes, of course, in terms of our portfolios. We no question are happy about the results, but also have to make sure we protect what we've earned over the last few years.
So ever since I started working at Baskin Wealth, there has been, this is the third presidential election.
Yeah.
And I can't remember a single time where I made a buy or sell recommendation on any stock that had anything to do at all with who was the president at the time.
Yeah.
So,
because crazy stuff can happen, like a pandemic out of nowhere where it shakes up everything.
Yep.
Yeah. So how can you say stock A, B, or C is going to be good under this Republican or that Democrat? We can post charts to the end of this podcast showing how stocks have done well under most presidents, Republican or Democrat. In recent history, Ernest, the stock market has done poorly under George W. Bush II. But he had two really tough events that happened under his presidency: the .com implosion, a recession that followed, and of course the 2008 financial crisis, 9/11. He had some tough things that really shook up the U.S. Economy at those times and led to the underperformance of U.S. stocks under his presidency. But I don't think it would have mattered if a Democrat or Republican was running the U.S. At that time. And that's the point, right?
And I think it's even harder to attribute, specific performance of specific sectors to certain presidents.
Yeah.
So one anecdote that has really stuck out to me is the fact that private prisons, these are the most Republican thing that you can think of, right?
So these are for-profit prisons run by publicly traded companies. Yes. They're almost like REITs, right? They pay a lot of cash flow.
Yeah, they are REITs.
Okay,
some of them are
it's
REITs.
A U.S. phenomenon, of course.
There's no private prisons in Canada.
There's no private prison in Canada.
At least we know of.
So why would a private prison, the expectation would be do better under a Trump because he may look to deport more people or more vigilant under crime?
No, so the point is that everybody would expect that private prisons are thriving under Trump, Republicans, and that they are suffering under Democrats. Yeah. But that's not what happened if you look at the stock price performance of the private prison companies. Yeah. Under Obama, they actually did better than they did under Trump.
Interesting.
You actually lost money in private prisons if you owned private prisons from 2016 to 2021.
And that was still when interest rates were quite low.
Yes.
Yeah.
So it's not at all clear that certain sectors are going to underperform or outperform under each individual presidency.
And timing matters, of course. Obama had a spectacular run under his presidency, but he inherited a stock market that had just come out after the great financial crisis when it was at a very, very low period of time, right? And so the first couple of years, the recovery, all attributed to him, and like I said, you can attribute it to the president. I don't know if they have any impact whatsoever on the stock market over the fullness of time.
The best question that I saw was from Waste Connections,
Yeah.
which is a company that we own, and they announced earnings. And there were certain regions that were a little bit softer. And an analyst asked, well, do you think that this was because of the election, right? Like an analyst was actually asking a garbage collection company, like, was there less garbage because people were worried about the election going forward?
Yeah.
That was that was a humorous
Yeah,
example that I noticed.
I don't know what people are thinking, but I can assume a lay person would, or even a very sophisticated investor would assume Trump is going to be better for the economy than
Right.
the Democrats, right? And so, as a result, get ahead of it. But that's, the markets are forward-looking based on expectations, and anything can happen that can take it all back or worse. So, I think the takeaway from this conversation is we're not going to make any changes. We're going to stick to our process of buying good businesses. And, if we need to adjust, we'll adjust. Anything else you want to add there?
Nope.
All right. So before we get to our feature discussion, the company that we recently purchased, let's talk about one of the largest positions in our portfolio, and one that's done quite spectacularly is Constellation Software. We've done a couple of podcasts on Constellation. Such a company that moves to the beat of its own drum, right? No conference calls when it releases its earnings. Happily will release its earnings Friday at 5:20 p.m., right? When the markets are closed and no one's paying attention. That's on purpose.
Yep.
Not to say the investment team, the CFO at Constellation he'll communicate with you very quickly. If you have questions, they're very on the ball. We've spoken to them a number of times, but this is what they want to achieve. This is the message that they're sending. We're focusing on the long term. We don't need to have conference calls. If it's good enough for Warren Buffett, and he's one of the richest guys in the world, I think we can follow along the same suit. So, Ernest, your take on Constellation, was there any meaningful notes from the Q3 earnings release?
It's a fairly quiet quarter for acquisitions overall. Some people had noted that their acquisition, the amount that they've spent on acquisitions was quite a bit less than
last year.
Both versus last year and relative to the amount of cash flow that they were generating in the business.
Yeah.
I think they seem to have made this back up in October and November.
Yeah.
So most seems to be more of a timing issue.
Yeah.
And I'm not really concerned about that.
Yeah, I mean, some people might say, well, this just goes to show you it's facing more competition in M&A, and the law of large numbers it's got to slow down. But I don't think you can learn too much from year over year or quarter over quarter. If it turns out that it's a meaningful trend over the next 3 to 5 years, then that may be the case, and Constellation may have to look at doing different things to encourage more M&A. For those that follow Constellation Software, it's mostly a company that makes acquisitions, right? It's a serial acquirer. That's what it does with its cash flow. It continues to buy small to mid-sized software companies, niche businesses. I think it has well over 1,000 now acquisitions that it's made since going public in 2006.
Yeah, give
or take. We don't
know the exact.
Not going to pull that one off the top of my head, out of my head right now, but about 1,000 acquisitions, and last year kind of surprised the market by making quite large ones, right? Yep. Carving out pieces of larger companies, and these things take time, and sometimes deals take longer to close. We have no idea what they're working on, but so quiet quarter, Ernest. One of the things I think some people noted was because it was a more quiet quarter, the cash is growing and the margins were quite strong.
Yeah, and organic growth was pretty good.
Yeah.
So organic growth for their maintenance revenues, which is the recurring software component, that was up about 6%. And that's true for both, including Topicus and Lumen, and for the non-Topicus and Lumen businesses as well.
Yeah. So Topicus is the European spinoff of Constellation Software. Topicus is actually having a banner year in terms of acquisitions, right? The highest amount of acquisitions since going public, and more just busier, I guess, the year to date than Constellation Software.
Yep. They have, as you noted, they've made a couple of carve outs. Not this quarter, but so far this year, that seems to be a continuing theme. So Lumine, they did an acquisition of a business from Nokia. Modaxo, which was part of their Volaris operating group, they did an acquisition from Conduent. It's another public company. So that this seems to be a bit of a focus area for them at the moment. And one thing I want to note about Constellation is that stock's been doing really well.
Yeah.
So I think like 30 something percent year to date. Over the last 2-3 years, like more than doubled. But the important thing to understand about that is that it's all earnings driven. Like the multiple on the stock hasn't really changed that much.
Yeah.
So
Fascinating.
all of the growth of the stock price is just because they're growing the business, rather than like people getting more excited about the stock or the growth prospects or anything like that. And that's what we want to see.
Excellent. So I guess there's no real game-changing thesis on Constellation Software. It's doing what it's doing. Some quarters are going to be more aggressive than others based on timing of closing of deals. Obviously, we don't have access to conference calls or management saying, well, are you guys paying up now more for acquisitions? We really have to wait for Mark Leonard to discuss it well, they do communicate once a year, right? They have their annual meeting, and where they give a lot of detailed information and meet with a lot of heads of the different businesses and walk you through what's going on. I think they would probably say the same thing. They're not gonna chase deals, and they still believe that they're the best home for acquisitions, right? Because they're not going to, when private equity buys you, private equity doesn't sit still. They try to merge you with other companies, put on debt on your balance sheet. It can be a very aggressive and tough way to operate, whereas Constellation says, you guys have done a good job doing what you're doing. We may do a little bit of rationalization to improve margins at your company, but we're pretty much going to leave you alone.
Yep.
All right. So segue of Constellation. So what makes Constellation so special, and what would lead to the reason why we bought our company in our portfolio called TransDigm? What do you think those two companies kind of share?
Constellation's model is, as you noted, is they make acquisitions and then they improve the acquisitions by focus. Like, so what happens when Constellation typically buys a company is that they'll go in and they'll say, okay, this is how you're operating the business. Maybe the daughter's enrolled in, like, as the head of HR or whatever. Maybe you're funding a company car. Maybe you're spending too much on the pet projects.
Yeah.
And we're going to get rid of all of that. We're going to improve the return on, we're going to install an operating discipline at the business. We're going to focus everything around improving margins and long-term growth and return profile of the business. So whatever you spend on, whether it be marketing or whether it be research and development or making new products, all of that has to be optimized for the long run. It has to be with a view of making money, not just because it's something that you want to do. Yeah,
because they're not buying these companies to flip. They're buying them to hold and get as much cash flow growth going forward as possible.
And that's what Constellation's model is, and it's obviously worked very successfully over time. TransDigm is very similar to that. TransDigm is in the aircraft parts business. So these are things like seatbelts, valves, motors, those kinds of things on an airplane. And, they're necessary for the plane to move. And what TransDigm does is they'll take these parts, they'll sell them first to OEMs like Boeing and Airbus, and then in the defense market.
So if Boeing's making a new plane,
Yep.
It's probably going to choose TransDigm as the maker of its seatbelt and seatbelt latches, right? Or whatever, what have you.
Sure. Okay, whatever.
Okay.
Yeah.
Yeah.
So TransDigm would have the part, and then Boeing would qualify it into the plane.
Yeah.
And they also do this for the defense market. So
Yeah.
for the U.S. government, the Department of Defense, for OEMs like Honeywell and those kinds of companies.
But once that the plane is sold to American Airlines or Air Canada, then it's Air Canada and American Airlines' responsibility to maintain the plane.
Yes.
And if a seatbelt breaks, you can't launch, the plane can't fly until that seatbelt is replaced.
Hope not.
Yeah, I hope not, right? So that means the plane has to go back to the Air Canada or American Airlines maintenance hangar,
Yep.
out of commission, and someone's got to fix that seatbelt right away. And you don't want to wait 5 seconds for that seatbelt to be fixed, right? Because you're losing, airlines are a terrible business to begin with. And if you got a plane out of commission, you're losing money from the second it stops flying.
No, and these aircraft parts are a fantastic business.
Yeah.
And to your point, the reason they're a fantastic business is because, number one, they're necessary for the plane to keep flying.
Yeah.
If you don't have them, the plane doesn't fly and you're not making money as an airline.
Yeah.
But more importantly is that the part is often qualified by the OEM.
Yeah.
So the way it works is that when Boeing creates their plane, the
OEM means original equipment manufacturer, for those that
yes.
don't follow the lingo. And there's not many OEMs, right? There's Boeing, there's Airbus.
For commercial, there's
Yeah.
basically Boeing and Airbus.
Boy, that's it.
Yeah.
There are some defense companies like Lockheed and Raytheon and General Dynamics, which TransDigm will sell to, but really only a couple OEMs.
And then there's like, in the private jet market, there's
private
like
jets.
Bombardier and
Yeah.
those guys.
Yeah.
But basically it's Boeing and Airbus.
Got it.
And so when Boeing makes a new plane, they'll create the drawing of the plane and, with the list of all the parts that are being used in it. They'll submit it to the regulatory authority, which is the FAA in the US. And the FAA will say, we approve your design of this plane. And that's the part that you have to use on your plane.
Yeah.
Right?
You can't switch it out ever.
Yeah. So if you're using this wire between the engine and the I don't know, whatever.
We don't know the
Yeah.
different types of doohickeys that go in
Yes.
there, but yeah.
You have to replace it with exactly that part using that manufacturing method and from that specific company.
Once you choose your manufacturer or supplier, you're married to them for that plane for the rest of its building existence.
Exactly.
Okay.
And the reason for that is because, you don't want them to swap the part with some unknown manufacturer from China.
Okay.
Right? Like it's very highly engineered stuff that goes into this
So
plane.
why won't Air Canada use once the plane belongs to Air Canada, it's bought the plane, the seatbelt breaks, why won't it use a 3D printer to make a new seatbelt? Or
Well, you're not allowed to.
there you go.
Yeah, you're not allowed to. You have to use the original supplier.
Beautiful.
For that seatbelt.
Yeah.
And so what TransDigm has realized is that if you have a business where the customer is basically forced to use, like they're forced to buy that part for the ongoing maintenance of the plane, you can do a lot of very interesting things to make money by doing that.
Like
you can raise prices.
Yeah.
You can cut costs.
Yeah.
And that's essentially what their business model
you're
is.
holding the leverage in that relationship, so to speak.
Yeah.
Those TransDigm says that it doesn't price aggressively and raises prices at inflation plus, whatever that means.
Well, so
Yeah.
the term that TransDigm would use is called, we price for value.
Yeah.
Right. Like that's a nice way of saying we're raising prices on you quite aggressively.
So I can assume that a latch or what have you, the price doesn't go down ever.
No.
Each year, if it keeps on breaking, Air Canada is going to. So, but
No, but what's
Yeah.
the thing is that TransDigm knows exactly what the demand profile of the latch is going to be.
Yeah.
Because the planes are generally, like once a plane is in service, it typically flies for about 30 to 50 years.
Yeah.
And because of past experiences with this plane.
How long specific
apparently,
things like,
like how many hours the plane after the plane has been flown, how often you need to replace that latch,
Yeah.
right? So they know exactly when the airline needs to replace it. And so
they keep their inventory lean and mean as a result of data analytics
Right.
to understand, to provide to the airlines the specific parts. Got it.
So now I think the price gouging aspect has gotten a lot of press.
Yeah.
I think a lot of people, like, understandably, dislike TransDigm because of their business practices on this area. But I think it's important to note that, these are not like the types of parts that TransDigm typically provides. These are like $5, $30 parts, right? These are very minor things where the price increase is from like $5 to maybe like $25. And the airline's not going to go out and like go on an RFP to replace a $5 valve just because the price is now $25, right?
No.
It's generally pretty immaterial overall compared to the overall operating cost of the plane.
If they trust the quality, they can trust that the part's going to arrive on time, as quickly as expected. That should be good enough for the relationship to continue.
Yes, and what TransDigm does do really well is, I think they're very careful about quality. Like their parts are never going to be responsible for like service defects or anything like that.
Yeah.
And they're always sure that there's inventory available, so you're not going to be able to not replace the part because of manufacturing issues or supply chain or whatever. And that's very important in the defense market, because the last thing that the Department of Defense wants, the Army wants, is to not be able to fly because they don't have inventory, right?
Yeah.
Like as we all know, the U.S. government is not the most efficient with their spending, but what they do care about is ensuring that their people are out in the field, right? And that's what TransDigm does a really good job of.
Okay, so we discussed a little bit about pricing and its business model. Talk to us, Ernest, about TransDigm in terms of, for a lot of people, they may look at it and say, holy smokes, they carry a lot of debt on their balance sheet. They generate a lot of free cash flow, but where does the capital expenditures go? How can they make this much money? And of course, Ernest, it makes a lot of acquisitions. Can that continue? It's now a large company, $70+ billion market cap. Where does the growth come from going forward?
So to the first point, the reason that I think there is a parallel between Constellation Software and TransDigm is because a large portion of TransDigm's strategy is to make acquisitions. They'll make acquisitions of companies that make these aircraft spare parts, and then they'll go in and, like Constellation Software, they will apply a very rigorous process to improve returns. Whether like raising prices is, like, we've talked about that part, but they'll also have a return discipline on investing in new parts, right? Like if they don't see a path towards achieving good returns, they'll stop investing in that. They'll cut costs where necessary if there's manufacturing inefficiencies, and they do a lot of this, and that's a key part of how they make money.
They're also very similar, just to cut you off, about Constellation. A lot of people that work at Constellation must buy Constellation stock, and many have become exceptionally rich as a result. I think that's the same, not necessarily that you're forced to use your bonus at TransDigm to buy TransDigm stock, but a lot of employees are excited and continue to buy the stock, and those that have been there for a long time are exceptionally rich. And so it's, treat your employees very, very well too, and that's how you encourage retention and good results going forward.
So to your point about the leverage and the incentives, TransDigm has a lot of debt. Like, I think they're currently running at around 5 times net debt to EBITDA, which is a measure of leverage.
Yeah. So for those that, our style is really not to get in bed with companies that have a lot of leverage, because leverage can get you into trouble, right? Interest rates go up against you, your business results start to go down and now you are in trouble. A recession hits or some disruption happens, and all your earnings now have to go and cover your debts. And that's a big problem. But TransDigm says, bring on the debt. We welcome it. And here's why.
Well, that's only a bad thing if you can't handle it.
Yeah.
Right. In TransDigm's case, again, going back to the point about having a predictable stream of aircraft part sales as the plane is flying, they know what the demand is going to be for these parts, barring outside of the pandemic, which is a separate topic. But generally, they have a pretty good idea of what kind of money they're going to be making. And because with all their acquisitions, they're targeting a 20% equity return on their investments.
Okay.
So
Sounds pretty good to me. Very similar to what Constellation is earning, by the way, on its
higher. Constellation's a bit higher.
Constellation is about 24, 25% now.
Yes.
So might even be a better business than TransDigm. But anyways,
But
yeah.
because TransDigm's targeting a 20% return on equity, and they generally know what the business is going to be like, there's no reason to not use a lot of debt in their capital structure. And that's what they do on purpose. They lever up the balance sheet. If the leverage goes down because the business is growing, they'll lever back up by paying a special dividend or doing share buybacks.
And that's exactly what they did in 2024. They made a special dividend of about 5% of the share price or market cap because it was not as fruitful a year in terms of acquisitions. And it was a great year in terms of fundamentals. And the leverage had gone down, generating a lot of free cash flow. And it paid shareholders a huge dividend of $75 a share. And is kind of guided going forward that it will pay that or more going forward because it has a lot of confidence in its business growth going forward.
And I think they have been they're very proactive in how they manage their leverage. So if you think about like a mortgage for your house, for example, right?
Yeah.
What you worry about is that when the renewal comes, like you're not able to pay your mortgage, right? And so what TransDigm does is that through a variety of mechanisms. Number one is they've fixed in their interest rate, so there's no potential surprises from interest rates like soaring. And then secondly, they're very on top of maturities. So like today, there's no bond maturities until 2028, and they're very well staggered after that. And by being so proactive with their balance sheet, like even in 2008, when there was a credit crisis and TransDigm was a much smaller company, there was essentially no liquidity issues at the business, right?
Yeah. So and I guess same thing in the pandemic when no one was flying or few were flying for 6 months or a year, and that what it must have been tough for their business, but because none of the debt was coming due, it could cover the cash flows either with cash on hand or from the few sales it was making at the time.
Right.
Yeah.
And then I think to your last point about where's the growth coming from. Well, obviously they're going to continue making acquisitions, so that's one aspect. Another aspect is that commercial aviation overall is a good place to be. Here's an interesting figure for you: is that since 1945, which is the end of World War II, commercial air travel has grown at about 6% per year.
Wow.
And it's been extremely stable outside of COVID.
So that's doubled every 12 years, give or take.
Yep.
That's dramatic. That's why, Ernest, when I fly home from Pearson, Air Canada, or what have you, you got to wait a half an hour at the gate just to find a gate because there's just so much demand. And that's why, in Toronto, they're going to be upgrading our airport just to add more gates.
Yep.
More people, more demand. And if it's going to double in the next 12 years, watch out.
Yeah, and the drivers of this are quite, like it's as people are getting richer, as more people are joining the middle class in the world, as they develop airports, people want to travel, right?
Yeah, well, like even in the U.S., I heard the stat the other day that barely over 30% of people have a passport.
Yep.
Right? So maybe they're flying internally, but they haven't flown to Europe or what have you. In China, I think it's 15% of people have passports. Yep. In India, it must be much lower than that, right? So it's a big world out there, and they've yet to start exploring not only internally into their countries, but going for vacations and business. And as you said, as people get wealthier, that's one of the things people love to do is travel and spend money on travel.
Which drives replacement parts.
Which drives replacement, yeah. So TransDigm is the ultimate play, in our opinion, on travel and leisure, for sure.
And then on the aircraft supply aspect is that because of both the COVID-19 pandemic as well as Boeing's various issues producing planes and the strikes and all those kinds of, and all those issues, is that the average plane has gotten older, right? So over time, I think I think Boeing will probably figure it out somehow.
Well, Boeing just had a machinist strike that just ended last week, and that's going to screw up TransDigm a little bit for the next 6 months to a year, right?
Yep.
Because they're just getting back and building airplanes. By the way, a lot of airlines are very upset about these strikes because the order backlogs are huge. Airlines are waiting for new planes from Boeing and Airbus, and it just ain't happening. Ernest, I don't think TransDigm makes that much money on selling the seatbelt to Boeing. They make more money on selling.
Lose money.
They lose money.
Sometimes lose money.
Yeah, but still, it's going to impact their revenues, but not their margins so much.
But I think that is another source of growth going forward as Boeing and Airbus are able to finish these planes and get them shipped, especially because TransDigm does have more share, like they have more parts on newer planes versus older planes. Yeah. So as the fleet gets upgraded, there's going to be more parts that go into them as well.
Excellent. Any other points you want to make about TransDigm that I didn't ask you?
No, I think we should have bought it earlier.
Yeah.
If you look at the stock price, I think that's not really a controversial thing to say.
No, not at all. Yeah.
And I just wish we bought it sooner.
Yeah, but you've laid out some good reasons to believe that the future is just going to be as bright as the past. TransDigm, as we talked about, to sum it up, a great acquirer, knows how to improve margins at the targets, is very good at financial engineering, generates a significant amount of free cash flow. I think there's been talk kind of like Constellation of TransDigm at some point looking beyond airplane parts as well. Is that something that?
Yep, I think they have in the most recent, like in the last year or so, they have expanded into slight adjacencies. Mm-hmm. So they've started doing some things with testing. They've started doing some things with helicopters, and they have kind of explored possible in the medical field as well. Yeah. Businesses that have similar characteristics, but we'll see how that plays out.
So as these companies get bigger, Constellation is now, what is it, almost $100 billion Canadian company. TransDigm, I guess, similar size and give or take in Canadian dollars. They will have to look at adjacencies or maybe different markets to get the big growth. But in the meantime, the markets that they're in are still growing, and there's still many more acquisitions to be had. And both are run lean and mean and have been all-star performers. And yeah, I wish we bought it sooner. We should have talked about that name a lot sooner. But that's the breaks in investing. And, we can't cry over all the things we missed. We can only be excited about the future and hopefully all the profits that we'll generate from owning great businesses. So, Ernest, thanks a lot for being here. We'll see you back here real soon.